So good morning, Monday market analysis time. And boy, we have a lot to analyze today. What a crazy few days. So I'll come to the charts and my take on that dump in a bit. Let's just start with the usual. Let's start what's on the calendar. Today, nothing in the USA. I think they might have a national bank holiday by the looks of it. So I'm not really sure if there's just nothing happening or that they are closed. Oh, there is some bars happening, so they're not closed at least. So that's good. What is interesting the coming days? Tomorrow, balance of trade. You see it took quite a big plunge in September. Expectation is that it will recover towards the 60s, but I have a bit of a bad feeling about that. So for me, that's definitely one to watch. News comes out at market open, just before market open, actually. So Tuesday, US market open, definitely to watch. What else is on the list? Nothing Tuesday, Wednesday, some job numbers. Very interesting to keep an eye on because Friday we had the very disappointing job numbers from a different company way. And this is the job openings. So how many jobs are open? It did peak, declined, and if it declines further, then that is a bad sign. I don't expect these to decline. Also, the forecast is pretty much the same as the last one. But again, like we saw Friday, if the real numbers are much worse than the forecast, then it could definitely move the market. And that proved to be very right Friday. What else? Jobless claims, but pretty much the same. And obviously, on Friday, we got the inflation rates year on year, the most important one. See, it's been skyrocketing pretty much, and it is expected to even go up higher to 6.7. I think that's a bit optimistic. So a lot of in the core inflation rate, same also. So enough watch outs in the market, but I think today will be, coming days will be very important for crypto. If we look at the macroeconomics, Europe is on a slight green start, actually not doing bad at all. UK 0.77, Germany 0.37, approximately the Stock 600, the European average pretty much 0.49. So those are on for a good start. So if these were deep in the red already, I would have definitely moved to USD already. For now, I'm just watching the US pre-market numbers. I'll take a close eye open later this afternoon in EU time. But so far, Dow Jones and SP 500 seem to open slightly in positive. You see the Dow Jones value stocks being green and SP 500 too, but the Nasdaq is slightly in the red now. It was green earlier today, so interesting to see how that will develop in the coming hours. Keep in mind, the dump was pretty much initiated by macroeconomics, so it's very likely that the macroeconomics will determine if we go down further quickly or if we stay in this range. So let's take a look at some on-chain metrics that were interesting on this dump. The all exchange futures open interest, so it's pretty much how much people are borrowing to have their leverage positions open, and it was pretty much sky high recently, and you see that it plunged down to much more less overheated levels. So, but there's definitely a lot of room to go down even more. You see, in the previous big dump, we came down to, what was the lowest? Pretty much just above 5 billion. We're currently still sitting around 10 billion. So a lot of overheated futures positions have been wiped out. I don't know if you guys saw the liquidations channel, but it was just complete madness there. Both longs and shorts completely wiped out. But as you can see, there's still quite a lot of positions open. So it does look much more healthy, but there is still a bit more room to go down on the open interest. Another way to look at it, this is more compared to the price. This is just the plain bar. You see that we did come down. It's a different way of calculating this with the simple moving average of 7 days. You see that it's been, since the all-time high, it has been dropping quite a bit. It's the new graph they got on since a couple of days, so the averages are not going back in time that much. So that's interesting. Let's take a look at some other charts. I was locked in, you idiot. Come on. There we go. You see that exchange reserves did have a bit of a spike during the dump, but it's now dropping again. So the exchanges gained a nice amount of Bitcoin, but they already sold again. So it just left the building once again. I think that's really nice to see that the downtrend is continuing, even though a lot of futures positions have shaken out. They clearly were waiting or creating, depends on how you look at it, for a leverage shakeout like this, so they can gobble up all those liquidated position Bitcoin and sell them over the counter again. Very nice, clear behavior there. My position index, pretty much stable, not much to do. Ethereum keeps getting staked, no change there. You see that the spike in the exchange reserves of Bitcoin, we didn't have that really on Ethereum. So that's a very interesting observation. So I'll come back to that later in some charts. Token transfers mean there were not like a crazy amount of transactions at this dump in time. So for me, that's an indication that the majority of the selling pressure came from leveraged exchanges, because those are not on-chain transactions and not from spot exchanges. So that's interesting metric to take a look. Let's go to my Glassnode dashboard. Circulating supply issuance, no weird peaks there. Number of addresses keeps growing. Time there was the same story here, not an abnormal spike in number of transactions or in a bit in volume, obviously, but hash rate difficulty all still look pretty good there. No spike in transaction fees as we saw before. So on-chain metrics, it definitely looks like just a major shakeout of all the over-leveraged positions, with the exchanges being the beneficiaries gobbling up all those Bitcoin and selling them instantly, like this spike pretty much proves. So let's take a quick look at the bull cycle charts. Actually, we fell through the CTO band quite far, and it is switching to gray now, to the bit of neutral zone. But this obviously lagged, so it takes some time to catch up. So on the Pearl ratio, we don't see much movement. We did come down again to pretty much the baseline, but we're still far from highest time frame bottoms, but we're also very far from even these previous all-time highs. We're very far from predicted cycle peaks. On the logarithmic regression curves, we pretty much bounced off the bottom of the how you call it, the true value range, or like the average of the band, average price. So nothing crazy here, nothing to report really, still intact there. The Fibonacci's are not interesting at the moment. There is some other interesting thing if you look at the daily and weekly chart. Bitcoin Investor Tool, it's essentially moving average ribbon percentile on Fibonacci distances. So what we see is that in all the previous bull runs, the real peaks were pretty much high above the top lines. And before that, we touched the red line a couple of times before having the big blow off top. Here also it touched it and we had a blow off top. It came back all the way back here in 13. Same here, the big blow off top to go into the bear market here. Touch, 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 break out, drop down. But it is quite interesting if we look at the chart pattern here. These are patterns in development. They're not confirmed yet because we don't have enough touch point. But if we just try to guesstimate what it could become an ascending triangle. That's obviously a very bullish accumulation structure where the top of the range is about the 65K. It could wick a bit above it. But on the long term, it would be best if we don't break that all-time high just yet. In the long term, it might sound silly, but we don't want to break that 68.5, because if we stay below it, then the argument for the ascending triangle becomes more valid, and an ascending triangle is a bullish accumulation consolidation range. If we make a bit higher high and say we go to like the 70K range, then there might be an argument for an ascending wedge, and that's a bearish pattern with the target back down is all the way here. So that's definitely not where we're going. Obviously, those fail also sometimes, but it is interesting to see what happens here, especially in the coming days. Just look at the chat. Yeah, to confirm it, for a pattern to be confirmed, you need at least 5 touch points. So we have 1, 2, really 3, 4, 5 maybe, but I think because of this big gap here, I do need a bit more confirmations for it to be more valid, in my opinion. So we'll have to see how that turns out. interestingly, if we just extend these moving average ribbons just a bit, and I did my homework already, you see that the average line goes up that way, and this goes up that way. Then let's take a look at the previous dump. We had two big dumps. We had the V-shaped recovery dump here in September, where we had pretty short reaccumulation with higher lows. So that's one option. So let's take that bottom, but it looks different than this one. Like here we had a very steep crash and a big wick up, and now we're going sideways. So if we look at this pattern here, where we had a steep drop, big wick up, and then we accumulated in the range for a while before eventually getting this big rejection on that 30K level and pushing up. So what I did, I copied this longer term, and it also came after a double, triple all-time high, and we also had a double all-time high here. So could be a bit of a fractal. And if we take these, and I'm sorry if you don't like how it looks, if we take that candle pattern, then you see that this is a very clear pattern, and it does mean that we will dip down to 40K-ish. And if we look at the previous low, it was at 40.8. And this one might go to just below there, and then so that pattern exactly aligns up with the previous swing low on the daily. And the triple bottom structure that it forms pretty much aligns with the predicted extension of the bottom range of this indicator. Then you have your relief rally, and you come down once again to test the resistance of the range where you currently are, or that we are coming into, before breaking out higher, going to 97K. But realistically, with dumps like this, especially macro induced, I don't think we can count on new all-time highs for quite a while. My experience that dumps like this usually take 2-3 months. To accumulate, recover before barging up. So on the short term, that might suck, but hey, we don't know what happens if the Fed all of a sudden comes back on their money printing and buying assets cut down that they discussed recently. Then who knows, we might go straight up into a V-shaped recovery like we did have before. So coming days will be decisive for the next month to come. Long term, Bitcoin cycles are lengthening. Every cycle that comes between 6 months to 1.5 years, estimated a longer cycle. And the less straight up we go, the longer the cycle takes, the higher prices in the end we will reach. So keep that long-term outlook in your mind, because if we go straight to 100K here, then the bull run will be over much faster, because that parabolic moves tend to end quite abruptly. Well, if we take our time, consolidate, confirm that 40K as a really, really bottom, it's something in the end you really like, because the stronger this 40K is established as previous support resistance, then it's a very good chance, in my opinion, that will be the bottom of the next bear market, if that ever really comes. So looking at history, how these bottoms play out, there's, like here we've got exactly the same pattern. You got a low, a bit of just slightly lower low, then a higher low, and then you take another run. And this took How long did that take? Yeah, that also took 1.5 to 2 months also. So we have to see how that develops. But it could be something looking like this, and it aligns perfectly with the extended EMA Fibonacci ribbon. Like we touch the bottom, we spring back up, we come to this ascending trend line here of the triangle that we break out, confirm, and then take off towards pretty much 100K-ish. Long-term outlook, nothing changed. Bull market structure, in my opinion, is still intact. The previous weekly, let's take a look at the previous weekly swing high. Don't forget, that was all the way back in July. That was 30K. So if you look at it that way, on the weekly scale, we perfectly bounced off the bottom of the CTO line. And we're now trying to break above it. So long-term outlook didn't change. The theory of lengthening cycles didn't change. The biggest change is that we had a big leverage position shakeout. In the long run, that's just healthy. So coming days will decide if we go into a longer term triple bottom that might take until January, February to play out, or that we get a more V-shaped recovery and climb up faster. Let's switch to the fundamentals. Also good news on the short term. We see that the DXY is perfectly being rejected at the descending trend line here. And this is today's figures based on the European coin movements, pretty much. So that is good news for Bitcoin. We would like to, because this is the Bitcoin price with the moving average, and you see that this is the correlation index. Bitcoin is definitely inverse correlated to the DXY, and it has been so since November, pretty much before it even started dropping here. Since beginning of November, it was definitely inverse correlation. We still are. So if DXY starts to drop, and if we get more inflation and job openings and trade reports being worse than expected, I do see this one dropping quite a bit down. And that's could be the push Bitcoin needs to jump out of this dip faster than the chart that I've shown here. So this is good news. Looks pretty bearish, and even if we go up to these levels and make a double top with a slightly lower top than, or slightly higher even, doesn't really matter. A double top structure is pretty bearish too. So far today, it's respecting the descending trend line nicely. Stock markets, these are Friday's figures, obviously pretty nasty, but the pre-market was looking not too bad. Justin Sun up to his old tricks again. Yeah, already saw the memes that whose wife did he sleep with this time to get people to trying to liquidate him. Gold had a bit of a nice bounce here, but is currently also in waiting mode to see what the market will do if we really get a bad stock day. And this is quite typical, huh? If you look, where is the Monday? Monday was the 29th. Yeah, you see the week, Monday we had a very bad Friday, recovery Monday, Wednesday, Tuesday, Wednesday, very bad. Thursday, a bit of relief, but Friday again bad. And you can see that pattern quite a bit. If you go back in time to how Black Mondays go, it could be something like this. Interestingly enough, there were some stocks completely being destroyed Friday. On a daily chart, DocuSign. And that's funny in perspective to the Omicron crisis, because the stocks that completely got destroyed are pretty much those that completely pumped during the previous lockdowns. So the market does not seem to, yeah, take out the volume. Look at that. That's just, and it completely pumped during the, look what it did since the COVID crash in March. It completely went skyrocket, and now it's all the way back down here. And they say that Bitcoin is volatile. Well, if you drop 40% at market open, then I don't think we can complain as Bitcoin compared to that. So that's a stock that was very popular during the lockdown. If we take a Zoom, also one of the lockdown darlings, it also got destroyed. It's down so far. Nobody expected that. A lot of people, including me, bought here. I exited quite fast on my stop loss already, thank God, because it just dropped through the floor. So it doesn't look like, if you look like stuff like this, let's see what Netflix did. Also one of the lockdown darlings. It also just keeps dropping. So to me, it does not look like the stock market is expecting big lockdowns with big market crashes still. So they're still moving towards value stocks and a bit out of the tech stock bubbles. But stocks doing crazy dumps like this, together with the inflation rate and together with the job reports, even though pre-market still looks good, be on guard, because this could turn into a bloody Monday. All the signs are there, so let's see what happens. But if you look at the investors, don't know if I can find the chart. Investors' debt. I did see the graph, but let's see if I can find it. No, that's the government debt. No, I can't find it. If I find it, I'll post it in the channel. But the number of debt that stock investors have is sky high at the moment. And it's pretty obvious to me that if we get a Black Monday or a very bad week this week, that the government will overrule the Fed and just order them to start printing and buying assets again, and we will jump up higher. So already a half hour in. Quickly, I think we had these all covered. Yeah. Market cap dominance still looking like it's ready to bump up. Triple bottom, nothing really broken there. Volatility is getting higher. No big spike in short positions yet, so that's positive in the long term. And the total market cap reached a very nice bullish structure, but we have to see if this support box holds. And the DXY keeps dropping. One interesting thing, Ethereum is completely crazy at the moment. You saw the Bitcoin dump here from the peak to the let's see where we ended up. Minus 28%. Ethereum dumped less. But on the other end, Bitcoin recovered 18%, Ethereum recovered faster and more. So it dumped less and it recovered more. And that's what you can see in the Bitcoin, the Ethereum to Bitcoin chart. Very strong. It's really amazing. So that's quite very interesting to see there. This, yeah, no way to tell. We have to see. Long-term, daily, we're also in a very nice bullish harmonic. Short-term, it's waiting for stock markets to open. So can't really give you anything more than that. We have to see the coming days for more data to present itself, what will happen. All right, that's what I wanted to share today. Thanks for being there. And tomorrow, trading course, obviously, I'm gonna dive into the TradingView backtested a strategy, why it completely sucks, but for what things it is useful as preparation for the Sargent trade emulator, the strategy version that I'm working on. So I'll speak you guys in the channels and I'll see you later. Bye-bye.